SM Prime, the real estate arm of the sea-led conglomerate SM Investments Corporation, sees the premium residential market in the Philippines as among the firm's significant contributors of growth. The firm has allocated 100 billion pesos in capital expenditures this year. SM Prime last Wednesday reported an 11% increase in first quarter profits, scaling 11.6 billion pesos. As for its stock, SM Prime continues to trade within a dominant bearish trend, says Ron Acoba of Trading Edge, as seen by a pattern of successive lower highs and lower lows. But Acoba notes in recent weeks, the stock appears to have found temporary support around the 22 peso level. Its interim pivot resistance is 26 pesos. With us now for more is the Executive Vice President, Premium Residential Segment of SM Prime Group, Juan Jugo. Good to see you, Gijo. Welcome to the program.
Good morning, Kathy. It's good to be on your show.
So, have you got a name yet for the company, for the segment? If SMDC is mid-market, I believe you're in the high end.
Yes, we do have a name that will be disclosed soon, but what we're doing, it came out in the news some time back that we're consolidating all residential brands under one umbrella called SM Residences. SMDC is part of that. We have the Leisure Group as part of that too, and our group, the one we're starting off with the premium segment, will be another unit under SM Residences, and we'll disclose the brand and the name in proper time.
Right, but why now? I mean, what makes you say that now is the right time when there is a lot of uncertainty over Philippine GDP growth, growing north of 6%, could be below that, and by way of global policy uncertainties, OFW remittances slowing?
You're right, but if we look at how this premium segment has performed over the past decades, despite global and local turbulence, the headwinds it's faced, this particular segment has always been proven to be quite resilient, quite steadfast, fruitful, and prosperous. It's been growing. Despite all the challenges the industry as a whole has faced, this segment has performed quite well. And why now? Over the same period, several decades, this company, the SM Group, has quite convincingly dominated the segment it's in. Beginning, of course, at retail, and it's evolved. No, that retail segment has evolved into something very, very strong. Affordable housing through SMDC has also anchored itself as the leader in that segment. Offices have prospered. It's only this particular premium residential line for the primary use that we haven't quite entered in an impactful way just yet. And because it's proven to be a very steadfast market, we made the decision to enter it. Now we have the land bank, we have the resources, we have the experience. We're building the organization, and we have all the right ingredients in place to make sure that we succeed.
Metro Manila has an oversupply of condominiums. So would you be taking a stab at Metro Manila for your premium residential developments?
When we talk about the oversupply of condominiums, we have to put things in context. You know, my personal view in all my years in this industry, high-end segment, is that the bubble, the sensitivity has really been in the down market, the broad-based market. But this segment, the premium line, whether it's premium or luxury, ultra luxury, it's not a very big market, but it's very stable. It's quite lucrative. And I don't see the oversupply in that particular segment. Now, this is why we want to make a move on it now while the time is right.
So where would you build first and why? What's going to be the key differentiators?
Well, the organization has been blessed with a proper land bank because of the foresight of our leaders in the past, the owners. The founders, it's built a footprint across the nation with sizable land banks. And it's now just a matter of choosing which parcels to choose for the right product. So yes, we do have parcels in Metro Manila, and we do plan to make our entry in Metro Manila, hopefully within a year. But we do have properties also that are ripe for unlocking in key cities like Cebu, for example. So if things go as planned, you'll be seeing a lot of activity from us, robust activity from the premium line in Metro Manila, in Luzon, and in Cebu.
Pretty interesting. It's really an affluent, discerning market that you're trying to reach. So which international market or markets are you targeting? Because Collier says the sweet spot for, say, the OFW market is in the 2.5 million to 7 million peso range per residential unit. But your luxury units are way above that.
Yeah, we have to put things in the proper categories. Now, when we talk about premium residential, the premium market, it's really a conglomeration of substratas. So after the affordable housing market, which SMDC quite owns, we plan to enter what we call the entry-level premium. That's where SMDC quite ends its product line. So maybe we start at 15 million and above, and then we plan to produce premium residentials, probably 25, 30 million, all the way to luxury, 50, 60 million, if the products are right and if the locations are right. Few and far in between, if there ever is a chance to do ultra luxury, if the market is ready for that, then we'll get into that as well.
Give us a bit of color here. How would you describe the prospects then for high-end market? Just going by occupancy rates or rental growth across the current premium properties we just seen there by SM Prime, such as Conrad Hotel, Samila Coast Beach, SM Aura, SMX Convention Center, Tagaytay Highlands, just to name a few.
I can't mention the exact metrics right now for those product lines, but overall the activity has been quite robust. Despite the turbulence we've faced globally and locally, we've seen that the Philippines in general has performed ahead of the curve. Our GDP last year was 470 billion. Our inflation rate was below 3%. Our GDP, depending on which institution you talk to, is projected to grow 5 and 8%. So all things are in place and all arrows point upwards in the right direction for us to enter this segment. Now, market-wise, if we do condominiums, then we open up ourselves to foreign investors, which is quite good because, as I mentioned, the Philippines has performed ahead of the curve, which means that this opens the door for investors overseas to choose our country to put their money in rather than put it somewhere else where it might earn lower yields. So it's a good time to enter a very stable and very progressive market.
Good to hear more silver linings out there here in the Philippine economy. Thank you so much, Gijo. Appreciate the time and the insights there. Jose Juan Jugo of SM Prime Group.